Hi there. Welcome to the closing bell on the 19th of November. I think the main message from me this week is as this bear market rally continues, just be wary of jumping on it at the wrong time or getting it overly bullish, I guess, at the wrong time. Because we did have a few speeches during the week from Fed officials, just really driving home the point they're nowhere near done yet. Employment's still very strong. Inflation's not defeated, even though it is starting to roll over in a few indicators, as we saw with the CPI figure. So I think the market's just getting a bit ahead of itself on the sort of softening of the CPI figure, and they have to listen to the Fed, and they are saying they're going to keep raising rates. The terminal rate, I think one of them said during the week, could be all the way up at 7%. That would freak everyone out if that was to happen. So we're going to start seeing growth coming off the boil, demand coming off the boil. 2023 is a real wild card as far as, where growth goes, where interest rates go. I think it could be a pretty negative year. And, listen to a few macroeconomists, that sort of thing, who are really relating what's going on at the moment to sort of 2001 to 2003, rather than a 2008 sort of short, sharp crash and recovery with the Fed stepping in and changing the rules. Could be a slow grind where the market just comes off over a long period, like 2 to 3 years. And equities can be a pretty tough playground if you don't know what you're doing. So I think I'll show you the charts now that we're running up towards stiff resistance, and really anywhere from here markets can roll over again from. And I'll show you what I need to see to become more bullish. But as I've said, we're sort of short-term uptrend, but long-term, medium-term downtrend. And that's really the message I want to just drive home for you today. So let's jump to the charts and start with the good old S&P 500. I like to start with that. And looking at that S&P, I just want to make that point. And I think I've made it before, but if we look at these old sell-offs, 2001 to 2003, and the 08 crash, that trend change, the work done, retesting, which often happens, and that 10-month exponential becoming very important on the way down. If the market is weak, you'll see there over and over again getting rejected from that 10-month in 2001 to 2003. So just looking up close at where we are now, clearly we're resting and testing that 10-month exponential. So it is the point where you'd expect selling to come in if this downtrend is going to continue. And you can see here my little green diamond coming in, potential of a monthly buy pivot at the end of this month, but we're still quite away from the end of November. So, still a couple of weeks to go, and it needs to close above the high of that candle, and that's 39.24 in the S&P. And look, in the next 2 weeks, if the selling returns, it could be back down here. The fact that you've got the green diamond, that's needs to be there at the end of the month. So it's not a real green diamond yet. It'll be interesting to see how this month finishes up. But you'll know that the weekly is pointing up. You know that I switched short-term bullish a while ago when we got the false break of the low, the weekly buy pivot there, weekly key bar there, and another one here. So on a weekly basis, it is still marching higher. You've really got to see that turn down. Next week, let's say we get a weekly sell pivot after this week's range. That would be a weekly sell pivot within the weekly downtrend. And look, things could then start heading down from there. But we really do need to see that confirmation. So while it is in this state, I'm allowing this to find support where you'd expect it, and it could continue marching higher. But the higher it goes, the more it goes into stiff overhead resistance. And really, I'll flip a little bit more bullish if we get above that old high there which is up around, what, 43.27 in the S&P futures. So if it does crack above there, look, we could see a spike. Who knows where it goes? I'd say it won't go that much further. Probably like a sell zone of this whole wave down would be another area where it could turn down from. So, you know, it's still not necessarily out of the woods if it does get above there, but it does just change the picture somewhat. It changes from a strong downtrend, which is all still happening, to a bit of a different picture, a bit more of a sideways motion. So that's why I really need it to sort of stay below that level to just keep that really bearish picture in line, even though we've got this short-term rally going into resistance. So you've got to be wary of these bear market rallies. Plenty of people get killed in them. Everyone wants to be a bull. Everyone wants the market to go up so that we can all make money. So I assure you, plenty of people getting bullish in these runs, and probably too early. Now, of course, one of them is going to end up taking off, isn't it? But if you've lost all your dough on the way trying to pick the bottom, you won't be there when it's time for things to turn up. So I am buying a few things here and there, which I think are good value fundamentally, and I like the story, willing to sort of withstand some volatility. But really big picture, I remain in the camp of just respecting my bigger trends. That monthly trend is down. It's getting rejected so far. I really need to see that turn back up so I can say, right, it's, you know, similar to something here where we got an actual shift in trend, but not really, not for long. And then it turned back up and it was off again. But if it's one of these, you know, you've just got to be prepared that it could really turn down. And yeah, big line in the sand, that 3 standard deviation Bollinger Band on that 20-month simple moving average, the one below, just following that along the highest level of that is sort of a line in the sand. And we get a monthly close below that. And yeah, it's really looking disastrous. And yeah, just the long-term targets for you. Ultimately, if this does turn down from here, you can see that it did hit the point of control on this sell-off so far. So that's sort of interesting. It can turn up from those areas, but, you know, yeah, that sell zone of that whole wave is a tricky spot where you'd expect it to find a lot of resistance and that 20-month. So, you know, it could look something like that. And the next wave down would be a doozy and have everyone freaking out. And then let's see how it performs there. If it can turn up from there, I'm getting a bit excited, I guess, thinking that could be it. And the Fed would be backing off and that long-term trend would sort of still be alive and kicking. And if that doesn't hold and it goes down through here, well, that's just get some canned goods and hide in the basement. So just quickly on our market as well, I just wanted to point that out. You know, we've performed really well. I mean, it's been very difficult trading conditions. I don't think anyone's making that much money out there. It's, you know, we had a year of sideways motion, quick sell-offs, and then it's now rallying back into that selling pressure. Still, the long-term downtrend is in place. Still, I don't have a monthly buy pivot or anything like that, and it's going up into pretty stiff resistance. So the way I'd look at this, I guess I'll show you just quickly a weekly chart of it. And the way I'm seeing our market is really looking at that down wave that we saw. So that's actually the all-time high there. So we've had this big wave down that you can see there. And I'd really just analyze that and look at what it's doing here now. And you can see we had the initial move back to the point of control, it moved down into the buy zone area there, which is where it's turned around. Now it's rallying up towards that sell zone area. So that really is a big zone of resistance up there, up around sort of 7,300, is it, to 7,500, let's say. And if that resistance is there and it turns back down, this is going to look pretty horrible because it is going to basically trace out a ABC formation. So if I just show you quickly, and you know, many of you will see this straight off the bat. They're a pretty popular thing to look for in the markets. We've got that wave there, then we've got the A leg, the B leg, then the C leg. And if it then overlaps at A, that's when you're looking at this and saying, right, that's where you're saying get short, and you've got to stop you above the high that it creates on that move, and then you're expecting a continuation of this wave here. So that's where you get the best risk reward, where you're just risking this amount, and if it's a continuation, well, you could be making a hell of a lot, and you're looking at taking, profits, I guess. You'd probably be just looking at this little wave here and going towards the point of control, which would be the spot where you'd think you'd take some money off the table to create a free option. Because if it does bounce from there, then all of a sudden it's looking like an uptrend, isn't it? Like this. And it could take off. So you want to be taking some money when it does revisit a point of control of a wave it's in. So there you go. There's a little bit of a hint for you of what it can look like. We're not there yet. On the weekly basis, we've had this range on the week. So that's sort of setting itself up as a bit of an island reversal. If we have a bad week next week, for example, that creates the overlap of that ABC. And then all of a sudden it can look miserable again. But we're not there yet. And, it may want to head higher into that resistance before tipping over. But for me, that is the thing I'm wary of going forward, is that ABC will eventually take shape. All right, well, I think that's enough for today. I really just wanted to drive that point home. Don't be getting too overly excited by this market. The Fed is pretty determined to keep going. Growth is going to start coming off soon. Earnings coming off. Tech stocks are dumping employees. So that's going to probably start turning in the next few months. So, next year is looking a bit iffy. And if you're going to be trading out there, just be very nimble and take profits quickly. All right, that's enough. I'll come back with more next week.